Joining us now for an exclusive interview is OMV CEO Alfred Stern. Alfred, good morning to you. Thank you so much for joining. So the concern here, essentially, Uniper gets $13 billion in damages. That if Gazprom isn't paying this, then you'll have to redirect the money you're paying in your contract to Gazprom to Uniper. So we've gotten this court decision, 13 billion euros. What now, Alfred?
Yeah, good morning, Danny. Great to speak to you. Indeed, this is apparently what one could see in the press about Uniper. And I can confirm to you that OMV has released an urgent market message a few weeks ago that was highlighting such a risk. Because what could happen is that the payments of anybody to Gazprom in Europe could be seized and relieve then the party of its debt to Gazprom. So that is a potential risk. We have been preparing for such events for the last 2 years. We have diversified our supply sources. We have booked pipeline capacities so that at any time we can ensure that we can deliver all our customers also with non-Russian gas, in case such a interruption should happen.
Okay, so Alfred, just to be clear, because I think, there is some concern of the scale of interruption of flows. So if this happens, you can't pay Gazprom, the contract isn't existing in its current form. Just what does that look like? Is there any level of disruption or flows? Are you prepared at 100% to continue to deliver the fuel that is needed in Austria?
Yeah, we are prepared 100% for all the customers that have contracts with OMV to replace that with non-Russian gas. We have spent a lot of time and actually worked hard to make sure we have access to our own equity production in, for example, Norway. But we have also made third-party contracts in Norway, in Italy. We have made long-term LNG contracts and can use our capacities at the Gate terminal in Rotterdam. And then we made all the pipeline bookings to get us to the markets where our customers are active so that we can supply at any time the customers with gas, with non-Russian, in case the supply from Gazprom stops.
I mean, there's other threats from the flow of Russian gas. One is that Ukraine is unlikely and has said so that they're not going to extend their contract to have Russian gas flow through Ukraine. You say that you're ready, you're prepared for alternate routes. But Alfred, what sort of market reaction do you expect? It's been a volatile market. If these types of flows cease to exist at the end of the year, what happens?
Yeah, so in Europe, the supplies from Gazprom have reduced, the pipeline supplies have reduced significantly. There are still LNG supplies from Russian gas coming to various countries in Europe, but the pipeline supplies have reduced significantly. But there is a few countries, and mainly the pipeline through the Ukraine, where still Gazprom gas comes to Europe. That is lesser than it used to be, and with this one should expect a smaller market effect. We at OMV, our Gazprom contract is such that the supply location is the Slovakian-Austrian border, and we expect the deliveries to happen there. If they don't, we are prepared at any time to supply also non-Russian gas.
The irony is, you say that there won't be too big of a disruption to markets. You see it a little bit because Europe, as you say, you have alternate routes. It is awash in natural gas supply, but we continue to see these little areas of disruption. For example, there have been outages. There's warm weather in Egypt. There's warm weather in Asia, making concerns about competition for the flows. There was a disruption to Libyan gas supply. All of these have had some impacts on prices, but not huge. Alfred, at what point do we actually need to start worrying about the continued disruptions?
So I think the supply demand picture in Europe, but globally in particular with gas, is volatile. I would agree with you. There's always two components. The price is driven by supply and demand, but then there's, of course, also a psychological aspect to the pricing at the hubs and the marketplaces. And what we have seen over the last 2 years is that every little disruption, if there's a issue anywhere in this world, that we see that very often this has very quick impact on some price changes. However, what we have not seen is the huge increases that we saw during 2022 and 2023, because a lot of rebalancing has happened. New LNG terminals have come on stream. People made new contracts like OMV have, like I just described before. But it will continue to be an issue. That's why, for example, we at OMV developed the EU's biggest gas project in the Black Sea in Romania with Neptune Deep, because we believe that supply production in Europe is one of the best security of supply measures that we can make.
Right. So there are scars of the crisis, but you've rerouted, you've readjusted. Alfred, you've also been having discussions with Adnoc to merge your chemical units, discussions which have stalled. What are the issues still holding back the merger?
We continue to have ongoing discussions on a potential combination of Borouge and Borealis with an open-ended outcome. The industrial logic for such a deal is quite clear, I think, to bring together two leading companies, Borouge and Borealis, to make a bigger company there. I think we can all see that industrial logic, but of course, it's a high-stakes deal for both OMV and for Adnoc. It's also a complicated deal, and that does require in-depth discussions. We have more than 30 years of business relationship with Abu Dhabi. We are experienced in this, and we have made good experience to ensure that we are properly discussing the things before moving forward. So it's a complicated deal, open-ended, ongoing discussions. Okay. And we at OMV are focused to ensure that this is also value creating, that the interests of all of our shareholders are maintained.